With the half-yearly credit policy review due at the end of this month, the RBI governor met the top bankers today to take stock of the situation. And the Indian Bankers Association chairman said that the bankers prefer a CRR or cash reserve ratio cut over a repo rate cut, and that the bankers assured the RBI that they will pass on the benefits to further rate cuts to the customers.
We all analyzed the situation on credit growth. Clearly, credit growth has now settled in around the 16% range compared to a higher rate that was prevalent, a few months ago. But I think, in a way, what was also discussed was that liquidity is quite stable.
What will be the reaction of the bankers if there's a rate cut? Will there be a transmission? We definitely said that in order to improve the sentiment, CRR cut will help us to reduce the cost directly. So that is preferable.
Most of us voted for a CRR cut. And in terms of impact, there is no doubt that CRR cut has a greater impact than... and we also mentioned that last time the CRR was cut, most of the banks have given effect to transmission of the monetary policy by reducing their base rates. And even those who have done the base rate, the spreads have also been cut.
Well, yes, the meeting between the RBI governor and top bankers just got over a while back, and clearly, as we expected, the points of discussion mainly revolved around the fact that the cost of credit at this point of time is still pretty high, and that banks are really constrained at this point of time to bring down their interest rates because of the high cost of money, given the fact that the CRR rate is still at a slightly higher level. And so basically, bankers have put forward a request for a CRR cut. We're told actually that the RBI asked bankers for a poll as far as what they would actually would they actually want a CRR cut or a cut in the repo rate. So clearly, almost all of the bankers, we're told, actually did opt for the option of a CRR cut. Now, whether the RBI actually goes ahead and reacts favorably to this and comes up with another CRR cut in its policy statement is something that, of course, remains to be seen. But then, given what the bankers have put forward at this point of time, they've said that the real reason actually behind the fact that credit growth is really low, it's kind of come down to 15.8%, which is of course a 3-year low, and also the fact that asset quality is coming down on a sustained basis is really a point to note, because given the fact that interest rates are still much higher than a lot of corporate India is really comfortable with. So clearly that was what the demand was as far as bankers are concerned. The RBI is going to be putting out its policy statement on the 30th of this month, and whether they really take into account what these bankers have put forward as far as the demand for a cut in the CRR is concerned is something that we have to wait and watch.